Hello traders and welcome back to the Forex Geek. In today's video we're going to be diving into one of the most reliable tools in technical analysis. We're talking about the triple candlestick patterns. These patterns provide clear signals about potential market reversals and trend continuations, making them essential for any serious trader. Whether you're looking to spot bullish momentum or identify when a bearish trend is about to take over, these patterns can give you the edge you need. So stay with us until the end and you will learn how to recognize these formations and use them to make more informed trading decisions. So without wasting any much of your time, let's get started. So let's start with a brief overview of why triple candlestick patterns matter. Triple candlestick patterns serve as reliable market indicators because they capture a complete market cycle of buyer and seller interaction over 3 periods. These patterns hold significant weight as they demonstrate a clear shift in market psychology from uncertainty to conviction, or from dominance to capitulation. When you observe 3 consecutive candles forming a recognized pattern, you are witnessing the culmination of major market forces at work. Unlike single candlestick patterns that can often produce false signals, triple candlestick formations provide a more comprehensive view of market sentiment and direction. So, what makes these patterns particularly valuable is their ability to signal not just the potential direction of price movement, but also the strength behind it. Now, these patterns work effectively across all time frames, from 5-minute charts to daily charts, making them versatile tools for both day traders and position traders. However, their significance typically increases on higher time frames, where each candle represents more substantial market participation and commitment. So let's move into our first major pattern, the morning star pattern, which consistently signals one of the most strongest bullish reversals in the market. So we're talking about the morning star pattern, which is this candlestick pattern right here. So the morning star pattern is one of the most reliable bullish reversal signals in technical analysis. This straight candle formation typically appears at the bottom of downtrend, signaling a potential shift from bearish to bullish momentum. The candlestick pattern consists of 3 distinct candles: a large bearish candle showing continued downward pressure, a small bodied middle candle, which is the star, and this shows market indecision. And we have the third candle, which is a strong bullish candle closing well into the first candle's body. This is it. Sometimes it could close above the first candle entirely, but it should close well into the first candle's body, and it shouldn't be like this, but like this right here, or closing above it. So the psychology behind this pattern reveals a systematic transition of market control. The first candle demonstrates bear dominance, the middle candle shows their weakening grip, and the final candle confirms bull takeover. So for optimal trading results, look for these specific qualities: pattern forming near key support levels, strong volume confirmation on the third candle, and the third candle closing above the midpoint of the first candle. So risk management becomes crucial, with stop losses typically placed below the low of the second candle. So we're going to talk about the trading strategy in details. But first, let's look at the next candlestick pattern, which is the evening star pattern. And this is it right here. The evening star candlestick pattern represents a powerful bearish reversal signal that typically forms at the peak of an uptrend. This straight candle formation often marks the transition from bullish to bearish market sentiment, making it a crucial pattern for identifying potential market tops. It's basically the opposite of the morning star candlestick pattern. So the evening star consists of 3 specific candles: a strong bullish candle showing upward momentum, a small bodied candle, which is the star, gapping up showing uncertainty, and we have the third candle, a bearish candle, closing deep into the first candle's body. Now, the pattern psychology reveals how buyer confidence gradually erodes, and the initial bullish momentum gives way to uncertainty in the second candle, followed by decisive selling pressure in the third candle. So let's quickly look at our charts and try to spot these 2 candlestick patterns. Now,
remember the morning star candlestick pattern, which is this one right here, should be found in uh we should be found in market bottoms or at downtrends, at the end of downtrends, because it's a bullish reversal candlestick pattern. Why this candlestick pattern right here, which is the evening star, should be found at market tops, places like here, here, and here. So let's quickly look into the charts and try to find out, let's try to spot these candlestick patterns. So the first step when it comes to trading with candlestick patterns is identifying the overall trend and applying your technical analysis and looking at price action to ensure that you're trading in line with the overall trend. So let's start with the morning star. We have this key level right here. I'm just gonna change it to the line chart so that we can spot our key levels correctly. Have a strong key level here from this zone. I'm just gonna reduce the opacity of this. Okay, so we have a strong key level, this area of price, and you see price reacting off of this area multiple times in the past. So we have one here, we have several resistance here, have the liquidity here, which price is expected to come back and sweep, and we have the reactions here. So let me just change this back to our candlestick and you can see it clearly. And zooming in, you can see the morning star candlestick pattern, which we just discussed right here. We have the bearish candle first, have the indecision candle, which is the star, and we have the large bullish candle closing above the first candle and well into the body and just even above the first candle. And you can see this is supported by the rising buying volume with that candle, showing this is a valid morning star candlestick pattern. And after that, we should be looking to take buy trades after the formation of this candlestick pattern. Remember, it is in a key area, a key support level, so we should be looking to buy from this area, and we can see this morning star candlestick pattern, so we should be looking to enter our trade from that area. Okay, sorry about that. I'm just gonna okay, this is where we are. Okay, so after this, you can look to enter your buy trades from the close of that candle, remember, and the stop losses should be below the morning star candlestick pattern. Your take profits could be at key resistance levels like this, or you could just target the fixed risk to reward ratio of 1:2 or 1:3 for your take profits. So that is for the morning star candlestick pattern. It's a candlestick pattern that occurs frequently in the market, and it's not hard to spot it. We have one here occurring on this market bottom. We have the first candle, which is the large bearish candle, and we have the second candle, which is the indecision candle, which is the star, and we have the third candle closing above the first candle right here. So this is a sign that we should be looking to buy from that area. And now looking into this, if you zoom out and try to find a key level, if price is reacting off of a key level, you can see price reacting off this key level right here, this support level, and you can see price reacting off of that nicely with our morning star candlestick pattern, giving us the confirmation we need. Now let's look at the evening star candlestick pattern, which should be seen at market tops, and this should give us an indication for potential market reversals. Now if you look at this price action right here, you can see that we have several touches from this zone. This is a major support level, and price has reacted twice in the past. We have one here, a second one here, and we have several market liquidity that the market is probably going to sweep in future, which it did. And then you can see the reaction from this area, from this zone.
Then we have our evening star candlestick pattern, which is the bearish counterpart for the morning star candlestick pattern. So the first candle, which is the bullish candle, then we have the doji, the star in the middle, and we have the bearish candle closing below the first candle. Now this is an evening star candlestick pattern, and we should be looking to enter from here. Remember, we're talking about triple candlestick patterns we can use to trade in the markets. So we've talked about two so far. We've talked about the morning star candlestick pattern and the evening star candlestick pattern. So with this, you can use it to trade the markets. Remember, you should spot it at key support and resistance levels. Spot that, use key levels, and also use volume confirmations to trade with the triple candlestick patterns. So let's look at one more example before we go. So we're looking at three inside pattern. Now this is another example of triple candlestick patterns we have out there, and we have the three inside pattern. So the three inside pattern, also known as the three inside up and the three inside down, it represents a sophisticated continuation or reversal pattern that begins with a harami formation and concludes with a confirming candle. This pattern offers traders a precise entry point with clearly defined risk parameters. So let's talk about the bullish three inside up candlestick pattern. So the bullish three inside up candlestick pattern, which is what we are looking at right here. This pattern is our three bullish inside up, and it consists of a large bearish candle showing downward momentum, and we'll have a small bullish candle contained within the first candle's range, and then we have a third bullish candle closing above the high of the first candle. So that is the bullish three inside up candlestick pattern. So enough of the English, let's just dive deep into the charts and try to spot this candlestick pattern, this triple candlestick pattern. So the first thing is to identify the trend and where we are on the charts. We are clearly bullish. You can see this bullish trend. So we should look for key levels right now. And looking for key levels, I'm just gonna use the line chart to get our key levels. And if you're using the line chart to get key levels, you can see this is a major level. So I'm just gonna draw this. Okay, I can see price reacted here and here, and also we expected to come back and use it as support and push to the upside. So if we return to the candlestick, you can see clearly, see the resistance here. See the resistance occurring here, 1, 2, 3 here, and we expected to pull back into it and continue the uptrend. So looking at the bullish three inside up candlestick pattern, you can see it forming right here inside this support zone which we have. And you see the first candle is the bearish candle like we discussed, then a bullish candle forming within the range of the first candle, and the third candle, which is the bullish candle, closing above the first candle. So this is a bullish three inside up candlestick pattern, and it signals a buy trend starting to form. So we could just enter our buy trade from here, and our stop losses below here. You could use additional confirmations like your moving average to confirm your trend. Of course, we'll have a moving average cross around here, and it should confirm our trade, whether we should be buying from here. You can see the second bullish three inside up candlestick pattern forming right here. So if you need additional context, this is just for continuation. If you look at the line chart, you're gonna see this resistance turn support. Changing the candlestick patterns, you can see it clearly, price reacting off of that level. And you see, if you are a liquidity trader, you always wait for liquidity to be swept. You can see this liquidity swept right here, and price returning into our key level, our resistance turn support, and pushing to the upside. But looking at this, we are looking at our pattern. We have the three inside up candlestick pattern, which is the bearish candle, then the bullish candle within the range of the first candle, then the third candle closing above it. And you can see that after that, you could just consider entering your buy trade at the close of the third candle, and your stop losses below the first candle, and you can set your take profits at this major resistance level right here for a quick one, or you could just target a risk to reward ratio of 1:2, or you could target key resistance levels like this one. So let's look at the bearish three inside down candlestick pattern. We've looked at the three inside up. Now let's look at the three inside down. Remember, these are the types of the three inside pattern. So let's look at the three inside down candlestick pattern. So looking at this, I'm just gonna, okay, I have my illustration somewhere. Just gonna get my illustration up. Okay, I think is okay, this is it right here. Okay, we have it right here. Now the bearish three inside down candlestick pattern consists of a large bullish candle showing upward momentum. Then we have a small bearish candle contained within the first candle's range, and the third bearish candle closing below the low of the first candle. So this is just the opposite of the bullish trade inside up. This is the bullish trade inside down we're talking about. So looking at the charts, you can see this pattern forming right here. But remember, the first step is looking at the overall price action before taking any trades using candlestick patterns. Looking at this, you can see a very clear and popular reversal pattern, which is widely used in the market. We have a head and shoulder right here. So I'm just going to use the path to draw it. Have the left shoulder, the head, the neckline, and the right shoulder. And we have this break of the neckline, retest, and drop. So you can see this wonderful head and shoulder pattern right here. So it's a clear one. So we'll just be looking for the break of this neckline and the retest. And you can see as we had that retest, you can see this bearish tree inside candlestick pattern. We have a bullish candle right here. Then we have the bearish candle contained within the bullish candle's range. Then we have the third candle, which is the bearish candle, closing below the first candle's low. So you just look to enter a short-term sell trade at the close with your stop losses above the high and your take profit at the fixed risk to reward ratio of 1:2. I always advise 1:2 risk to reward ratio. And or you could just target key support levels like this one. You have a 1:2.83 risk to reward ratio. So this is just the bearish trade inside up the bearish trade inside down candlestick pattern and how you can use it to trade. So let's talk about trading strategy implementation. Like I said, let me repeat myself. Look for patterns forming near significant support or resistance levels. Also confirm with additional indicators like volume, the moving average, and also the overall price action, which is the most important. You should always perform your price action, look for key levels, and trade based on these confirmations. Place stops beyond the second candle's high or low, and target the next major support or resistance level. So that is it for triple candlestick patterns. They remain one of the most reliable tools in your trading arsenal. As you've seen in this video, these patterns offer clear signals for both trend reversals and continuations when properly identified. Remember to always confirm these patterns with volume and broader market context, and never compromise on your risk management principles. So if you found this video valuable, please make sure to hit the like button and subscribe to the channel Turn on the notification bell to stay updated with more advanced trading strategies and market insights. See you in the next analysis. Safe trading.